Welcome to the Daily Doe Basics, the series designed to help beginner investors navigate the world of stocks and investments one step at a time. Today, we're tackling a term you're bound to come across, dividend yield. What is it? Why does it matter? And how can you use it to evaluate dividend stocks? Let's break it down. A dividend yield is simply a percentage that tells you how much return you can expect to earn from a company's dividend based on its current stock price. In other words, it's a formula, and a pretty simple one. Dividend yield equals dividend per share divided by stock price. So here's an example. Let's say a company pays a dividend of $1 per share, and the stock cost $20 to buy. Well, now we can plug those numbers into our formula. So 1 divided by 20 equals 0.05, or 5%. So we know this company pays a 5% dividend yield. That means for every $100 you invest, you can expect to earn $5 in dividends annually, assuming the company does not change its payout. Now, before you go chasing high dividend yields, there are a few important things to remember. First, a high yield isn't always a good thing. A high dividend yield might look attractive at first glance, but here's the catch. Because the dividend yield is just a formula, and it's tied to the stock price, it can go up when the stock price goes down. But that's not always good news. It could be a sign that the company is struggling and that the dividend might not be sustainable. And if a company's dividend is not sustainable, that brings us to the second thing that you need to be aware of: dividend cuts. If the company's financial health declines, it might reduce or even stop paying dividends altogether. That's why you should not base your decision solely on the dividend yield. Instead, a better way to assess a stock's dividend is to look at the dividend payout ratio. And that's something we're going to cover in a future video, so make sure to subscribe and hit the notification bell so you don't miss it. So, what do you think about dividend yield? Do you look for high yields? Or do you focus on other factors when picking your stocks? Let me know in the comments down below. I'd love to hear your strategy.